Boston back. COVID-19 changes the dynamics of consulting-led digital transformation programs. And I'm Patrick Heffernan, Principal Analyst here at TBR, and I'm joined today by my colleagues, Bozhidar Hristov, Lesiczka, and Elitsa Bakalova. And before we get started, the usual housekeeping notes for those of you who have been on these webinars before. At the bottom of the screen, you'll see the series of buttons. From left to right, you can see the slides, you can do the audio controls, Q&A, speaker bios, and then we'll do a survey at the end of this as well. And after the webinar, you will get an email with a replay link, and that will allow you to register for more webinars as well. And if you have any questions, please put them in the Q&A widget. We'll try and get to them towards the end of this discussion, the end of the webinar. And then we do send out the webinar deck afterwards if you would like it. So you just need to request that, and we'll certainly send it to you. So what are we going to cover today? This is coming at a good time as we're right, just on the edge of August, heading into what has typically been a quiet month, but I don't think it will be for anybody anymore since vacations are kind of a mess. So we're coming at this too from the view of both IT services broadly, management consulting broadly, and digital transformation broadly. So for all that, we're looking at enterprise sentiment. The first thing we're going to cover really from two different angles, what we hear from buyers, particularly through our digital transformation customer research, and then what we hear from consultancies and IT services vendors when they talk to us about what they're hearing in terms of changing buyer needs and sentiments and demand. So we're looking at it through reflecting both those lenses or both those sets of conversations. The next thing we're going to cover are kind of key trends, and we'll provide some data and talk a little bit about how those trends have impact, what those trends are now and how we expect them to impact the second half of 2020. And then when we get to the go-to-market strategies, we're going to talk a lot about what's changed and what's going to continue to change, and we're going to drill down into three particularly important changes that have been happening in with respect to go-to-market in the first half of this year. So with that, I'm going to turn it over to Boz to talk us through the enterprise sentiment, what customers are thinking. Boz?
Yes, thank you, Patrick, and thanks everyone for joining us today. So the quotes that I have on the slide here, I'll let you guys read it in your own leisure, but I want to kind of share a few of the quotes we picked up from the recent round of interviews we completed for our digital transformation voice of the customer research, which published just at the end of June, which was well timed in a sense of like it was just 2.5 months in to COVID, and we were able to draw some very distinguished comparisons between what we heard from buyers about 6 months prior to that and 3 months into the pandemic, and how the sentiment was changing, and some of the key areas that were becoming opportunities, and maybe some of them were, there are more of a gap and more of an extended outlook and maybe what's to come once the pandemic abates. As the headline suggests, obviously, the COVID kind of caught everyone by surprise, so to speak, and it shifted the priorities from the buyer's perspective and how they spend their budgets, how they orient their value proposition, where they're thinking about what's important to them. And probably not surprised to many of you, many of those budgets were really oriented towards run the business awards, and really more something that was looking to optimize operations, optimize efficiencies, and many of the aspirational digital transformation programs that many of the vendors were enjoying really a strong revenue around consulting and project type of work kind of got on pause, essentially, and really the focus from the buyer's point of view was oriented towards, run the business, make sure we have the employees safe, make sure that our operations are running as smoothly as possible with the minimal disruption. So what we saw and what we heard from buyers that we interviewed, many of them confirmed kind of a broad-based sentiment that the enterprises that were cloud ready prior to COVID, they certainly made that pivot very easy, very, very quickly, and able to continue the operations as smooth as possible, which for others, they were maybe in the transition of their cloud agendas and cloud programs, forced them to accelerate, which certainly create opportunities for some of the vendors, especially the ones that have a broader breadth and deeper breadth into some of the infrastructure technologies, as well as some of the application layer management services. As we think about some of those immediate opportunities around IT operations optimizations, cloud, employee experience, buyers start to think about, okay, now that we're not generating the same revenue and we know what cloud can do for us, what are we trying to achieve as well as who's supporting our environment, and are we starting to think about our support system, who are the vendors that are helping us achieve those KPIs. So a trend of vendor consolidation has begun to emerge. And while maybe COVID was not the sole reason for the vendor consolidations to become more apparent, certainly accelerated certain areas within the stack of the traditional technology stack. So when we spoke to vendors about vendor consolidations, most of them kind of identified 3 layers of support, as you guys know, at the consulting advisory layer, the application services layer, and really the managed services. So where they saw the immediate opportunity for vendor consolidation was around the application services layer. They do recognize the fact that it's somewhat a risky move to change vendors or to leave less vendors to support certain programs because of complexity of the IT architecture. Is not just it's more like it's easier said than done, but certainly on the mind for many of the buyers when it came to how they select vendors, who does what. So someone like the India-centric vendors, as we guys know, many have been going up the stack, building some more of the application services and advisory roles. So now they can also do maybe what Accenture and Capgemini are doing, and then maybe capture some of those opportunities for them. Buyers didn't seem to think that the consulting layer will get consolidated. Maybe pause right now. Certainly will have an immediate impact of the advisory revenues. For many of the buyers, the high-touch advisory services is not something that many vendors are enjoying the same profits and revenue opportunities. But in the long term, they don't seem to believe that consulting will disappear. Those relationships are very, very strong in its core between the C-suite, between McKinsey's executives and the buyer's executives and whatnot. So where the compression and the vendor consolidations will likely see further acceleration will be in that middle layer, systems integration, application service management, because it has probably started even prior to COVID. The commoditization within the systems integration space had begun before COVID, obviously, and especially with many vendors are struggling to differentiate with, just trying to do everything everybody else is doing, right? Either developing industry-enabled solutions or going with everybody in terms of a partnership model, which we'll touch upon a little bit later in the discussion. But these are some of the kind of key elements to think about, what may be coming as a result of COVID. I think that the broad-based piece, I think the one lesson a couple of lessons to be learned here, I think is like, as we think about COVID forcing vendors to rethink their strategies and what buyers are expecting, I think one of the quotes points here is like one of the executives that we spoke to, reflects on what we probably already know in the market. 70% is a relationship, 30% is knowing your technology. I think that 30% know your technology is a key element of how the market will likely move forward and how some of the go-to-market models around pricing, around partnerships will evolve, because in the time of crisis, nobody cares about, or less people care about, I should say, what could be next and what the opportunities of innovation. Everybody's focused on really tight expense management and IT operations. So knowing your tech, I think it has paid off well for some of the vendors, and we've seen some early positive results from some of the vendors like Accenture and Infosys from the 2Q earnings cycle. We'll see if they'll be able to maintain that, going into 3Q and 4Q and how the market overall evolves. But it was a good reflection of the expectations and how quickly some of those vendors were able to pivot and really execute on the services supply side. Areas to think about, and certainly something that we don't want to ignore, is artificial intelligence and AI. We asked questions around that and wanted to better get a sense. Is automation really going to go in a high gear? Is analytics that kind of a bigger umbrella that's going to help buyers achieve the ROIs and vendors make the best case out of it? Buyers seem to be the sentiment kind of was somewhat consistent in the sense of like if buyers have started doing their programs for AI, they started to invest into AI. They're not putting those on pause. They certainly continue because they continue to execute on those programs. They continue to evolve their analytics program, automation programs, because essentially those are decreasing and lowering the total cost of ownership is certainly a good opportunity. I think some of the vendors that are pushing the envelope on and challenging buyers with their analytics and AI programs will certainly well positioned. But before anyone can even go to scale, I think the issues around governance and data interoperability standards are still impediment to be able to be established before any of those programs go to scale. But I think we're somewhat more optimistic on the AI and automation as a result of how COVID turned things around and how the market is evolving and opportunities that automation and AI as a broader umbrella presents long term, especially as in the immediate, at least in the short term, will be a lot about the cost savings. So there's some good programs to be run there. And last but not least, all these things changing. There's some new contenders and new opportunities that are evolving from a buyer's perspective and how they see the ecosystem going. And that goes back to my earlier comment for the vendor consolidations, is the role of the hyperscalers and the role of the hyperscalers into the ecosystem, which we'll click down a little bit more into the later discussion, in the partnership discussion. But what we heard from the buyers is that the role of the hyperscalers has become really central to the way they manage their contracts, and they have become really important piece of the puzzle of like who they get engaged with, rather than trying to engage with like I said, 3, 4, 5 vendors. Now they just go engage with AWS or Microsoft Azure as the central point of contract management and demand a fixed price management contract, and let the hyperscaler pick and choose which vendors they can subcontract for certain sub-services, from data storage to security to networking to application management, et cetera, especially as many of those hyperscalers have their own services arms internally. So for the service organization, the vendor consolidation comment that I mentioned, I think this is something to watch out for moving forward, and how those contracts are getting scoped and how those relationships change between the service and technology vendors. Hyperscalers, of course, should not avoid thinking about who they're dealing with, especially when it comes to who's managing those contracts. The role of the procurement has not changed as managing those contracts, and the procurement department is still getting incentivized based on the old KPIs. So I think hyperscalers may want to look into missteps or some lessons learned from maybe some other technology providers, software technology providers that may have tried to evolve their services arms and consulting arms a little bit more aggressively, and maybe did not work out. So maybe hyperscalers have an opportunity to learn from them as well. But I want to kind of plan that trend that we saw, and I think we're going to continue to look after and think about and research around and ask questions around how hyperscalers changing their value proposition around what buyers' expectations are. I'll catch up a little bit of Brett here, and I'll change the subject to Elitsa and share some more of the performance in the IT services and the management consulting space. But this is kind of like what we want to set the stage with the buyers and what their expectations are and what they really care about and where they want to invest. Elitsa?
Thank you, Boz. So I want to show you the broad picture around IT services market performance. The data on this slide is from TBR's IT services vendor benchmark, in which we track 29 IT services providers. So 2019 was a rather slow year for IT services vendors, and we see the low single-digit figures on the graph for the vendors that we cover on a quarterly basis. And the reason for the decelerating growth was the ongoing challenges for multiple vendors in the benchmark around the traditional IT service areas. They kept experiencing growth challenges, expanding in the legacy IT services spectrum, and started long before 2019 started to shift their portfolios to expand into new growth areas. but they started to also experience competitive pressures. And that was another factor when we saw multiple vendors over the past year specifically expand portfolios around digital, cloud, and cybersecurity, and trying to fight for the same share and for the same budgets. And we also saw in 2019 pockets of tight spending in certain geographies and certain industries, such as in financial services or in the public sector. UK had some growth challenges some of the vendors had growth challenges in that geography. So that was definitely reflected in 2019 performance. And then in the beginning of 2020, the global pandemic started to spread. So we definitely saw vendors begin to change their expectations for the year. And while 1Q20 was not such a challenging quarter because of the timing in March of the widespread spread out of the pandemic, we are certainly seeing revenue growth declining for many of the vendors that have now released 2Q20 results. And we expect likely 2Q20 to be the most challenging quarter, where a large share of the vendors will experience revenue declines, causing that deceleration in growth and making our expectation for now 2022 have a 1% revenue decline for the year. Now, as we track vendors on a quarterly basis, we're going to be updating our 2020 expectations, and we'll be refining our models. But overall, for now, this is where we have set our figures for the full year. Now, diving into a segment within IT services is management consulting. It's part of the consulting business. And we track management consulting in our management consulting benchmark, which is a semi-annual publication. So I just wanted to compare the trending between the broader IT services space and one of the sub-segments. So for management consulting, we see a similar trend in terms of the growth rate for the vendors that we cover in this benchmark. Here we have fewer vendors. We have 13 vendors covered in the report, but you can definitely see that there is a parallel in terms of the trend. So there is a definite deceleration that we expect to happen in 2020. From when we had 7.3% year-to-year growth in 2019, there will be a decline in the growth to 3.5%. And yes, it's positive compared to what we expect overall for IT services, but the advisory services space is kind of going to benefit from some of the chaos and the challenges that clients are experiencing during the pandemic, and the need to transform their models to be able to run their businesses and to support their customers during the crisis. So we'll definitely see some opportunities for vendors in the management consulting space. The stronger vendors with flexible policies and established communication and collaboration models will fare better in the crisis. However, nearly all vendors in the benchmark are now being challenged to find the best model to return to more normal operations as we phase out of the lockdown. I'd like to turn it over to Patrick to highlight the key trends that we listed during the first half of 2020.
Excellent, thanks. So these three things, these areas have been really top of mind for all the IT services vendors and the consultancies during this pandemic. And we've actually fleshed out a lot of these ideas in a lot greater detail that we're going to be able to cover here today in a lot of different special reports really since March. Most recently, we published one that described both the trends we're seeing, but then also drilled down into the topics that we're going to be analyzing and writing about this quarter, next quarter. So what I want to do right here for a few minutes is share some of the big ideas, and we're certainly open to taking questions on these at the end of this webinar. Client retention, it's been something that's ebbed and flowed when it comes to a strategic priority. I can remember 6-7 years ago, we did projects around how do how do vendors with the greatest success rate in client retention, how do they do it, then really a lot of those experience centers, innovation centers, all those design centers, those are really about client retention. And then I would say it fell off for a bit with the pandemic. Of course, it came roaring back. And consultancies and IT services vendors, of course, have an opportunity to prove now just how much their relationships with clients are really relationships and are not transactional, just services. And that proof comes in all kinds of forms. Specialty designed or specially designed apps that handle employee safety and productivity during a pandemic, rolled out, of course, free to clients in the first months of this. There's been restructured contract terms, to recognize financial constraints, an emphasis on real core run the business concerns and less trying to sell clients on strategy and vision and horizon planning. So when you think about all of those things that the vendors and the consultancies themselves can do, then you throw in the challenge of all of this being remote and missing that sort of on-site interaction. It's been a challenge. It's going to continue for the near term. And honestly, the longer the pandemic lasts, the harder client retention is going to be. And I mentioned clients first and employees second for a very specific reason, because it reflects the shift that we've seen in emphasis and tone since the pandemic started. So very early on, from our perspective, sitting in the U.S., we're talking about March, the consultancies and the IT services vendors spoke first and always about their employees. How do we keep them safe? How do we keep them sane and balanced, meet their health and their emotional needs? It was always about the employees. And it was productivity too, but more from the perspective of, do they have a laptop? Do they have a connection? Are they okay? That ethos has faded. The emphasis really now is on measuring and enhancing productivity in a sustained remote environment. Vendors have begun much more seriously considering how roles and responsibilities, and with that, of course, compensation and career paths, are going to change in a new, mostly remote working world. And then when you add to that the challenges of recruiting and onboarding and training, all of that, of course, has become much more pronounced, which is a fantastic opportunity for HR transformation consulting, but it's also an area where I think we're going to see differentiation in how vendors handle their HR, how they handle their people, how they handle their employees is actually going to impact the financial performance in the very near future. I think we'll start to see that the vendors that have been better at managing their employees, of course that's always true, but I think it's heightened during this pandemic. And then partners. So Boz is going to tackle this in a little bit more detail in the next section when we get to go to market. But I want to emphasize really how IT services vendors and consultancies, they have always evaluated and then invested in and then managed and then grown their partnerships with the technology vendors. That's always been true. But what we're seeing is a revisiting, an assessment now, and likely an overhaul of what I guess you could call 2019 practices, and to include, partnering culture, the traditional measurements around partnering, sales structure, all of that. Again, Boz is going to dive into it. I don't want to go too far, but I think it's important to understand that when we talk about partnerships, a big part of what we're talking about is how assessments and overhauls are really happening now and are going to continue to happen, we think, over the next 6 months or so. So with that, let's go a little bit deeper into go-to-market. Technology permeates everything now. That's not surprising. Every consulting engagement, every consulting engagement includes technology. Emerging technology is in every IT services engagement. And I really want to recommend that there are a bunch of special reports that we've done just in the last few months, specifically on calling them on PwC, EY, Accenture, Fujitsu, Atos. I'm probably forgetting somebody, and my colleagues will remind me who it is. But a lot of those vendors have, what we've written in our special reports is understanding the way that those vendors have evolved their technology strategies and how those evolutions have been driven by, the market itself, or by those vendors staying ahead of the market. So while it's sort of almost cliche to say technology permeates everything, it's important to understand how what the implications of that are, is that all of these vendors have to evolve how they go to market, and what they deliver, what is actually among their capabilities and their expertise. So when we look at the changes in the go-to-market strategies and keep in mind this constantly evolving emerging technology landscape, these three areas pop out: new offerings, partnerships, and M&A. And so I'll turn it over to Elitsa now to take over on the new offerings front. Elitsa?
Thank you, Patrick. So yes, from an offerings perspective, we've seen literally all the vendors in the IT services space rolling out solutions that are designed to address pandemic-related challenges, such as business resiliency planning and supply chain improvement. And some of the vendors have even opted to create specific COVID-19 organizations, which with the expectation that opportunities will persist and will remain into the coming year for such solutions. In some cases, we may say that this is, putting just a gloss over existing offerings. In other cases, they are solutions that are deployed now, in many cases on a pro bono basis, to address clients' needs immediately, but they will likely generate commercial engagements going forward after the pandemic, as vendors establish closer relationships with those clients and continue their ongoing collaborations. The pandemic also substantially boosted demand for cloud and cybersecurity. Those two areas really have been a common topic across the 29 vendors. As all remote working and delivery changes have necessitated massive shifts in the models of the way vendors operate and clients operate, and we as end users and people have changed the ways we communicate and live. So, but this also brought in new risks. So, from a cloud standpoint, the pandemic pushed clients to start favoring OpEx over CapEx spending, which is positively affecting cloud adoption, as one of the primary value propositions for cloud, in fact, is shifting from OpEx to CapEx models for clients. So we're seeing an increasing numbers of vendors placing secure cloud at the center of their expansion strategies and making investments in offerings, acquiring companies, and partnering with technology vendors and with the hyperscalers to enable hybrid cloud adoption. Such activities are generating opportunities for IT services vendors to advise clients and to ramp up their cloud activities, to modernize applications and move them to the cloud, and to orchestrate and manage cloud solutions. In cybersecurity, the overall shift over the past few months to everyone working remote, both for enterprises and for governments due to the pandemic, has created the risk around IT security and operational continuity. So as employees use new and pre-owned devices to connect to enterprise infrastructures from multiple locations, we see increasing attacks from hackers who use malware and credential phishing to target security gaps in areas such as companies' data and online presence, and thus challenging clients' remote operations during the pandemic. And we see nearly all vendors in the IT services benchmark wrap up their cybersecurity portfolio development to address clients' pandemic needs. I want to turn it over to Boz and Kelly to go deeper into the partnerships and M&A.
Thank you, Elitsa. I think just kind of expand a little bit more on, I always started talking earlier about the hyperscalers and some of the opportunities around partnerships. And I think Patrick mentioned that those dynamics have not slowed down as a result of COVID. Actually, I think the partner model between technology and services providers will further accelerate, and the go-to-market strategies are changing. They have begun changing prior to COVID, and certainly are going through the notions right now of COVID, and really looking to change. And I think that the biggest change in terms of the partner model between technology and service provider is that vendor agnostic partner with everybody model is somewhat going away. The exclusivity around partnerships is something that we have started observing, and I think we're going to see even more of that trend for a couple of reasons. As I mentioned earlier, hyperscalers and the infrastructure side are becoming really the central point of contract management from how buyers are looking into the technology stack and who gets involved. So services providers must ensure that they are on the short list of the hyperscalers and making sure that they get selected for subcontracting and supporting certain service areas when hyperscalers or other technology providers get selected by the buyers to be the main contact, right? So developing and establishing deeper certified bench, a cloud certified bench especially, is certainly a trend that we saw emerging through 2019, and I think it's further accelerating. Developing business units across around particular technology solution. We know Accenture has led the way for a few years now with business groups around AWS and SAP and Google Cloud and Microsoft. Just over the past quarter, the last 2 quarters, we saw pretty much most of the India-centric vendors, TCS and Wipro and Infosys, and just yesterday, Cognizant announced and HCL, Microsoft business units, essentially kind of like borrowing a page for the Accenture's playbook around specific technologies, because they want to make sure they ensure that trust with their technology providers to make sure they get on that short list. And that exclusivity, I think, will make even a better case when they go to market to the buyer, because buyers are starting to demand, see somewhat a separation of power, separation of labor between all the parties that get involved into the management and to the services support and technology support. So having that, pre-approved frameworks in terms of delivery, in terms of sales between the technology and the services providers from the get-go, either through pre-sales workshops or establishing new frameworks of self-accountability and peer review, that will ease any kind of concerns from the buyer side, because often buyers raise questions around the true intentions when one too many vendors try to sell them the same service. They often say, well, we have let's say, SAP coming to us selling the technology, and the same team, SAP, more companies selling services, and on the back door, Accenture, EY is knocking and say, we can do the services better than these guys. So it's somewhat confusing and really creating, that trust is weakening essentially. So evolving the relationship between technology and service providers, I think and exclusivity around those partner models certainly is something that will further accelerate as a result of COVID, because, as I mentioned earlier, know your technology is something that has proven invaluable, especially during the time of crisis, and demonstrating and able to provide a depth and breadth of specific technology will make everyone's life easier, making a better go-to-market and better value proposition for all parties, essentially. So I think that's kind of like the message I want to kind of leave here, is that how we see the change. And we've written extensively around that topic, and we've done some research around it as part of our digital transformation portfolio, but it's certainly we're seeing more examples over the last 90 plus days as a result of COVID. I'll turn it over to Kelly to cover up the M&A activities as well.
Thanks, Boz. So when looking at the acquisition activity, primarily among IT services vendors and management consulting vendors, the acquisition pace is not really, it's more or less just slowed down. Some of the more aggressive vendors in the past, or vendors that had more aggressive acquisition strategies, have been the ones that have maintained momentum. The nature of the acquisitions has not changed much. It's remained quite similar to 2017. The pace it's picking up slightly, but with the changing now, but it still is not returned to 2019. Vendors are still looking to build out and pursue acquisitions in the same area, so they're still looking for assets that will strengthen their technology portfolios. Looking for security or software, as well as cloud acquisitions we've seen more recently. Some of the COVID related activities have kind of accelerated some of these that they've already had. So they're using acquisitions now to kind of sustain the momentum and really position for the long-term growth. So the coming out of COVID are some of the areas that have changed a little. I don't see any major shifts coming forward. I think a few new areas may become more primary in vendors' acquisition strategies. Some things like security and regulatory. I think the quick shift to cloud and digital solutions has brought a lot of security vulnerabilities to the forefront and re-emphasize that area. So I wanted to call out a few examples of how a vendor's recent acquisitions and how their strategies have kind of maintained similar to 2019. So HCL, for example, in May, I believe, they acquired Cisco's self-optimizing network technology. And this is not uncommon for them. They've been looking to build more platform, product and solution-based assets. So this complements their Mode 3 portfolio with their platforms and products. Cognizant also has been looking to strengthen their cloud, software, and digital portfolio. So during 1Q20, they had acquired Lev and Collaborative Solutions, and the other day they announced an acquisition of New Signature, which is more for cloud advisory and Microsoft support. Atos as well has been adding on acquisitions too. They acquired Palladion, which is for managed security services, and Allier Consulting in France, which is more consulting capabilities too. So the nature of the acquisitions has kind of remained the same. They're more just looking to evolve their transformations that they've already had and keep going with those projects. Some of the vendors that have been acquiring, they've been able to benefit from discounts and lower valuations. Some of those vendors are the ones that have the stronger cash flows, the healthier balance sheets. So they've been able to take advantage of these opportunities. COVID has kind of brought out some of the weaknesses in some of the other vendors around leadership, management, as well as organizational agility. So that's kind of slowed some of them down, and they haven't been able to acquire as readily or as active as they have in the past. Some of those vendors that were able to take advantage of a lot of these new companies that are coming through, they will be better suited in the long term. I think as we move into 2021, we'll kind of see the difference between the vendors who are able to continue moving along, investing through acquisitions or even through other means. I think we'll be able to see the difference between those that were able to take advantage and those that are kind of falling a little bit behind. So I'll hand it to Patrick for other comments.
Thanks, Kelly. And just before we go, what we're going to do next is we're going to walk through a little bit of the portfolio that we have been talking about that will show where the research is coming from on those. But I want to point out a couple things that have been said over the course of the last 40 minutes. Boz mentioned that digital transformation projects are still ongoing, at least those that were underway prior to the pandemic, and that there's some expectation that will continue. And Elitsa made a comment that the second quarter may end up being the worst quarter of the year. And both of those are sort of rosy scenarios that assume that a lot of the positive signs that we've seen and the positive trends that we've seen are going to continue. And of course, we hope that's absolutely true. But I do want to caution that we are keeping our eye out for signs that would make us change our mind on that, because I think one of the challenges that we have for ourselves is not being as surprised as we were by how much has changed really in the last 6 months. The last webinar that we did, if you missed it, you can find it on the TBR webpage, was about sort of looking 10 years out. What is the world going to look like in 2030? And the challenge was to think as broadly as possible and as creatively as possible. So I think when we look at the metrics that we've looked at and when we've looked at the trends that we look at, we come away with a more positive sense of where things are now and are heading. But we do have to be cautious that we don't get caught up in the good news and miss the signs that something might be amiss. So so we're going to end here with before we get to a couple of questions that have come in, and please send some more in if you have them. We just want to walk through exactly how this portfolio is built, so you have a sense of where we're coming from and what's available out there that supports everything that we've said. So, Boz, you're first here with DT.
Yes, thank you, Patrick. I think I already kind of referenced a couple of the publications that we cited throughout the deck today. But just to kind of take a step back, digital transformation program that we are running here throughout TBR is really a true bridge across the entire TBR research with a few pillars within. And when I say a true bridge is because we are tapping into all the research areas because, as you folks know, digital transformation programs are touching upon enterprise-wide initiatives as well as all parties get involved when it comes to a true transformation at scale. So when it comes to TBR's view on digital transformation, we publish monthly reports across those areas, which are, as we have outlined here, in January and July, we have really a deep dive focus on analytics benchmarking. We have 20 vendors that we benchmark every 6 months with an analytics services space, and we've been really looking into the evolution of the business models across those vendors, not just from the basic BI tools, but into the analytics, into the AI, how AI is starting to impact those business models. That discussion is not just qualitative, but also quantitative. Has an Excel spreadsheet that comes along with the publication, and it's really we see analytics as one of those table stakes across any digital transformation programs. Very similar in fashion how cloud has evolved as a top of mind technology, and business model analytics is following very close suit of how, and that's why we have analytics as one of the key pillars of that portfolio. The other pillars similar to that will be digital marketing services, also a semi-annual publication in April and October, along as well with an Excel spreadsheet. And the reason for digital marketing services is because a large focus has been around customer experience. And we certainly recognize that COVID may have shifted some of those ideas and investments from a CX more to the EX, employee experience part of the functions within the organizational functions. But we don't want to, as Patrick said, things are evolving, and while we may have hit a somewhat major bump in the last 90 plus days, we don't expect the focus on CX to slow anytime soon. Actually, I think models around customer experience will continue to change, especially with field sales support and thinking more creatively how to engage with end consumers. I think we're going to see some further resurgence, maybe not in the traditional way how some agencies have done work in the past from advertising standpoint, but certainly they could use some of their creative chops to come up with those ways to engage in virtual settings. The other pillars of that portfolio, we do have emerging technology. As Patrick mentioned, we know every engagement touches upon and includes emerging technology. So we have a publication of 4 of those emerging technologies in terms of throughout the year. This year we have published Edge, we published 5G, we are just doing our research on AR and VR that we'll publish in August, and in November we're looking to come and do an update on blockchain and our AI as areas that we published last year, and see how those 2 technologies have changed a year later from previous publications. So those are, and this is in a true collaboration fashion between the services team, the cloud team, the device team, the networking team, so that's kind of, like I said, it's a bridge across the TBR's research portfolio. And the other 2 areas that we have are cross-vendor analysis. I mentioned earlier the partnership model discussion. Certainly we dive deeper in a various way, but we look into either vendors against each other, or we do partnership model evolution, and obviously include buyers into that discussion. So cross-vendor is kind of a broad term, but it can be applied to multiple ways. As one of the upcoming cross-vendor reports, we're actually looking to dive deeper into the hyperscaler discussions that I mentioned on a couple of occasions throughout the deck today. And last but not least, we are into the voice of the customer, which we spoke from the very beginning, which is a sentiment. We always make sure we bounce and hear what buyers are saying, on how they are thinking about their budgets, IT priorities, new digital transformation programs. So we feed that ongoing discussions into the other areas as well, but we also publish twice a year an exclusive voice of the customer report with specific either surveys or in-depth interviews or a combination of both. pass it over to Elitsa to walk you guys over to the IT services side of the research.
Yeah, so the IT services benchmark is, I think, TBR's oldest benchmark that we began to publish the report back in 2005. We look at 29 IT services providers on a quarterly basis, and we analyze their performance across 15 metrics, 4 service lines, and 3 geographic regions. On a quarterly basis, we deliver to our clients a comprehensive report that includes qualitative and quantitative analysis, and we also provide, similar to the DTI research, we provide an Excel database that contains all the metrics that we use to compile our research. Kelly, on to you for management consulting.
Thanks, Lisa. So for management consulting, the coverage is laid out on the slide, but it covers a broad set of data, including revenue growth, headcount breakouts, but it goes beyond, it goes along different segments, regions, and verticals. For the majority of the vendors, we have individual profiles as well, and I think they provide a good view on the individual level and kind of gives them a perspective and point of view on those vendors in particular, to how they would be doing in the future, what are kind of their strengths, what are they doing well, and what would help them succeed, or what if they don't do this, what could happen to them, they could fall behind. Out of all the profiles that we write, the McKinsey and the PwC profiles, they show the synergies between services, their professional services, as well as their management consulting practice. So I think it shows a good way of how they're able to leverage those other pieces of their business and how it flows through to their management consulting side. All of these analyses are backed up by the data that we provide. There's the accompanying data file that includes data back to 2015 on all the vendors. So it provides a good perspective on how vendors are actually doing. So what have they been able to accomplish over the past 4 or 5 years, if they're able to take advantage of certain things that they've invested in, some major investments, is it actually helping them or hurting them, and also how they've weathered certain market conditions compared to their peers. So if they, looking back for a year ahead to now, how did they compare to others? Were they able to successfully maintain, or were they kind of falling down short?
Excellent, thanks. And it's funny, Kelly mentioned the data going back to 2015. Just had a request right before I went on vacation from somebody looking for data even older, in order to look at how the management consultancies survived the last crisis, and what could be learned from that, what could be expected going forward. So we're going to do the Q&A now. If you have any other questions, please drop them in. We've got quite a few teed up, but what we can't answer right now, we will of course answer by email. So the first question that we're going to tackle is, which vendors stood out while which vendors are deeply impacted? And I think the best way to handle that is to kind of go around the room. Let's see, in order, we'll go Boz, Elitsa, Kelly, and myself. Which vendor stood out? Boz, thoughts?
Yeah, I mean, just kind of coming up from, I think the 2Q earnings cycle is still ongoing, but a couple of the vendors that I cover, certainly, one of them essentially didn't surprise too much in a way, because they came out really from a position of strength from the last fiscal year and a really strong pipeline ending their 1Q results. And I think they also had a little bit of an advantage in terms of their quarter ended end of February. So they were really like just 1 month into they really didn't get too much impacted on the 2Q side, because first month of the second quarter was still kind of like business as usual, so to speak. So certainly we'll keep an eye on, see how they continue that performance throughout the rest of the year, getting some positive outlook from seeing how they're trending currently, but they're not immune to any disruption. But another vendor that I want to call out, certainly so far out of the India-centric packs, has been Infosys. They kind of stole the show so far. We're waiting for the Cognizant results today, but so far Infosys outperform its peers that have reported, and I think speaks up volume to what their current CEO has done over the last couple of years, and really put Infosys back on track into focusing on what they do well, which is services on the supply side, rather than trying to be too far aspirational into the consulting and advisory, really doubling down on cloud and managed cloud services and really be strong into what made them successful in the last 3+ decades. So for me, Infosys has been the winner so far of the quarter.
When you look at the vendor landscape that we saw in 1Q20, I really think that, and we haven't seen many other vendors that have reported yet. I mean, just nearly half of them reported 2Q, so we have yet to get the data in. But I feel like most of the vendors will shift toward the left side of the graph. The equation usually with some decline coming in, and most of them will see thrust in revenue growth in 2Q20. And I don't anticipate such a big shift in terms of, some vendors that have performed well now falling behind their peers. They will still continue to grow better, like Infosys and Accenture or HCL, which were the 3 leaders in terms of growth during 1Q20. I think the vendors that will see most challenge are the ones that were already experiencing revenue declines prior to the crisis. Vendors like T-Systems, like Ericsson Services, HP, Pointnext, IBM Services, which is by far the largest company in the benchmark. It's number 2 in terms of revenue size after Accenture. So those companies have started way before the pandemic to transform their business models, to shift their portfolios in terms of higher growth areas, to restructure contracts that are low margin and don't generate growth and that are impacting their performance. But they were still in the process of transforming, and when the pandemic hit, so we haven't seen them go in the positive side of the equation for quite a while now. And those companies would still remain and even slump further down as we go into the results for 2Q20.
So one of the ones that I was thinking of, I feel like I always go back to the people piece, and I had mentioned it briefly during the presentation, but I think some of the vendors that have struggled with stable overall leadership are kind of at a disadvantage. So one I would call out is Wipro. I think the fact that they lost their CEO stepped down, I believe in June, I think that's going to make it difficult for them to come back. I think they were on kind of uneasy footing before, so I think going through a crisis when you're not quite set could be a bit of a disadvantage for them. When I look at some of the other ones like HCL, for example, I think along their leadership team, they have about an average of 25 years experience with the company. So I think that makes a difference when there's that the stable message coming down below. I think it helps with their communication, and they're better able to adapt to a crisis, and they're a bit more agile in that sense. So I think Wipro might be at a disadvantage in that sense. They were already trying to switch a little bit, and now they have different messages coming from above, and we don't know what else could change for them. So I think that makes a big difference, and it could put them at a disadvantage. Whereas HCL, their earnings, they had said on their earnings that the worst is behind them, or they believe the worst to be behind them. And I think because they had that more stable footing, they were able to quickly respond and ensure that they were able to address their own internal needs as well as their client needs, which will help them be more successful through the rest of 2020 and hopefully onward. Patrick?
Yeah, I think I'm going to surprise my colleagues and say that the vendor I think has really shown through, and this has been Fujitsu. And I admit that's a little bit biased because I went to the Fujitsu Labs Advanced Technology Symposium last fall, and sort of at the time heard sort of where they were and where they were going, and certainly raised some questions even as I was impressed by what they were doing on the technology side. But since the pandemic has hit, a couple things have really stood out. One is how well they were ready for this kind of disruption. How sort of building in resiliency was something that they were prepared for. Their ability to continue delivering from global locations everywhere and all that, can continue to provide services without disruption. I know everybody says they can do that, but I think they were better able to articulate how they were able to do that and the why. And again, the business resiliency is a big part of that. And then I think we've also seen them partnering more. They've popped up more in the individual vendor reports, and that's why I have this particular slide up right now. In those individual vendor reports, we're seeing Fujitsu as a partner more frequently than we used to, and that gets back to what we talked about at the beginning, which was some of the big trends around client retention, employees, and then partnering. So to me, they've been an interesting. Well, you can't call it a success. Nothing is in the pandemic, but they've been an interesting story here, and one that I think makes it stand out for me. We have two more questions, so we'll do them quickly if we can. You talked about hyperscale and how customers are going in for one or a few vendors for the projects. Are you seeing that endpoint devices are also getting included in these deals, or are they more cloud-based? Boz, that's you.
Yeah, that's a good question. I mean, the hardware, the device market, endpoint device market, certainly it's as you guys know, it's been kind of like, well, let's just put the rosy glass here, steady. Although now it's maybe outperforming as what it has been historically. But I think what we see as a trend is some of the services vendors, going back to the SI specifically, how they're starting to think about their relationship with the entire ecosystem. And trends like devices as service is popping up. And not just from the technology and the OEMs vendors, but also from the services guys, as a way for them to think creatively, as a way for them to manage creatively this environment. So I think devices as service is something that we'll start seeing a little bit more moving forward, especially as buyers are looking to revamp their workplace solutions and services providers are trying to maintain their stickiness.
All right, we've got one more question, just enough before we wrap up. And it's, you talked about partnerships and mostly mentioned cloud vendors, actually right to what you were just saying about the hyperscalers. But what are you seeing from the software vendors, particularly SAP? So, they did just have sort of a version of Sapphire, and they've been doing a lot of conferences with their partners and trying to explain how things are changing. But actually, Boz, do you want to talk a bit about the specific research we did on that?
Yeah, absolutely. I think I mentioned it earlier during the presentation, but I think so our cross-vendor, so as part of our digital transformation portfolio, just walk you guys through earlier, cross-vendor report. So we published research around SAP and its evolving relationship with its SIs and buyers' expectations. So we did conduct interviews between SAP executives, EY executives, Atos executives, and buyers. So we're trying to get all these parties at the same place and understand what are the expectations, how those relationships are changing. And one particular piece stood up, especially around SAP, was that SAP is really going back to basics. You guys know they went with one big CEO departing and two CEOs. Now they're back down to one CEO. I think that going back to basic, I think it's very important for SAP for their long-term success, because they are, as I mentioned earlier, SAP model company or any SAP premium consultants, while still being an important piece of how they deliver service, especially for those niche areas that are very highly specialized. Nobody knows that code better than SAP consultants. Buyers felt that they may have tried to branch out too far, too much, too soon. So for them, it's about understanding and learning from this feedback, and really trying to shift some of those relationships and really go back to the drawing board, go back to and see how those relationships must change and moving forward. I mentioned earlier certified resources, establishing new KPIs for measuring success, peer review, accountability review between SAP and its SI partners, as well as how they deliver that message to the buyer. So we've done some research around it. Really key key components and really seeing some of those things, some of those attributes already kind of emerging and how SAP is changing its value proposition and go-to-market, especially around their partnerships and trying not to go too far and overstep boundaries into the services areas.
Excellent, thanks. And we are out of time, so please feel to reach out to us with any other questions you have. Greatly appreciate it if you fill out the survey. There will be a replay of this webcast available after, which can be sent to you by an email. And if you want to see the upcoming webinars or the ones that we mentioned in the past, just go to our website. And again, I recommend looking at the special reports we've been writing at a crazy clip since March. So thank you all for attending. Thank you for all your questions, and we'll talk soon. Thanks.